Hey, what's up, guys? Welcome to a Q&A session. I'm recording these videos for those who are getting issues regarding to smart money concepts and all those, all right? So you can ask me any question related to smart money that are related to charts. If the question is simple, I'm just gonna drop a screenshot of the answer on my Twitter or Telegram. But if the question needs some sort of explanations, I'll make a dedicated video for it, all right? So you can see the question right here on a screen. This guy asked, what if he gets 2 to 3 demand zones in a break of structure? So which one of that is valid, right? So this question can be seen in 2 points of views. Number one is, what if you get 2 to 3 demand zones in a structure? Which one is valid? And the other part can be, what if you get multiple demand zone in one break of structure? Which one of these demand zone is valid, right? So the answer is very clear. It needs simple explanation. First of all, if you are marking a demand zone or if you are marking a supply zone, it should be partnered with the structure, right? The structure on this chart is perfectly bullish. The demand zone is basically the last unmitigated candle before a break of structure. We got a break of structure above this specific high, and the demand zone is the last unmitigated candle before this break of structure, right? If you see this candle is mitigated, means this is not a valid demand zone. The demand zone for smart money traders is that last unmitigated candle before a break of structure, which can be this candle, right? So you have two demand zones right here. Number one is this demand zone, and the other demand zone is basically which caused this break of structure. That was probably this candle, which was unmitigated before this break of structure and later got mitigated after this break of structure, right? So first of all, this is the scenario, which one of them is valid. So if you are partnering demand zone with the structure, which is the basic criteria to mark a demand zone, the recent demand zone is the valid demand zone. This means if price comes towards this demand zone in this structure, you have to take confirmations inside this one. Don't wait for the price to come inside this because you can miss a beautiful leg, right? So you do not trade the demand zones blindly. This means if price comes to your demand zone, you do not take a long positions blindly. You have to make your system, you have to take confirmations, and then you have to open your long or short positions depending on your structure, right? So let's see, price came to this demand zone, and now right here, according to your own system, this is the whole demand zone. You have to take confirmations. That depends upon your own system, right? So once you take confirmation inside this, you can let it ride and you can make great profits. So let's see, if you waited for the price to mitigate inside this demand zone, you would have missed this beautiful leg. Why? Because this demand zone marked right here is not partnered with the structure, and the demand zone right here that was partnered with the structure, that's why this demand zone worked right here, right? The other aspect or other point of view of this question can be, what if you get multiple demand zones in a single break of structure, right? Which one of them is valid? Well, in this specific case, you have to see the imbalances, because without imbalances, supply or demand cannot form, right? So if you get a case like this, 3 to 4 demand zones in a single break of structure, which is rare in cases, so you have to identify the imbalances, because without imbalances, SNDs do not form, right? Let's number them: first, second, and third. So if there is any imbalance between the first and second demand zone, then this one is not valid, because liquidity lies below this demand zone, which indicates if price reaches to this demand zone, liquidity is below this and it can sweep that out, right? Similarly, if there is an imbalance between first and second demand zone, then second one is also not valid, because liquidity still lies below this one, and if price reaches towards this demand zone, there are very less chances of price to hold it, because liquidity lies right here, right? So in this specific case, the third one or this bottom one is the valid demand zone. So I guess the explanation was very clear for you. Make sure to join my Telegram for free trading signals. And if you have any questions related to smart money or related to trading, you can just DM me on Telegram or Twitter. I will answer you, right? Thanks for watching. Make sure to join my Telegram for free trading signals.